Hey everybody, welcome back to the Wealth Advisory's Top 10. We're on to May 2023. The year's just flying past. I'm going to do a little recap of last month. It was a pretty volatile month. Markets finished basically just about where they started. I think as of today, the day that we're filming, the NASDAQ's up like maybe 1%. The S&P, or no, actually I think the NASDAQ's flat for the month. The S&P and the Dow are up maybe like 0.1, 0.2% for the month, but it's been all over the place, up and down and up and down. And I think, we're sort of getting into like the final throes of the bear market. This is sort of what that looks like, when basically, the markets are so volatile that people are like, oh, the markets are going up, I better put money in. And then as soon as they get money in, the markets go down and people start to get disillusioned and you start to get to that like capitulation moment where everybody's just like, okay, you know what, we got to sell. But, so far that's sort of been held off because earnings have been surprising to the upside. But companies are beating estimates that are like way, way lower than they were the previous month. So, the analysts have already cut their estimates. So it's sort of like, it's a little bit easier to jump over a fence when you've cut the top like 3 or 4 levels off the fence. Q1 GDP came in, it'll be last week by the time you're watching it, earlier this week when we're recording at, I think it was 1.1% growth, which is still growth. But it was a lot lower than Q4 of 2022. It was lower than expectations, and it definitely shows that the economy, while still growing, is slowing down. We had the PCE, which is the personal consumption expenditure report, came out. That's the inflation gauge that the Fed really likes to follow. And that actually came out this morning. So my notes, actually, I'm really impressed with my notes because I feel really prescient. I wrote that it was going to come in hot, and it did. Core PCE came in hot, a little bit above expectations. The overall number, the headline number, as they might call it, came in a little bit below expectations, but just about in line. It shows that inflation is slowing some still, but it's still pretty high and, close to 5% year over year. I think the number was 4.7. People were looking for 4.6 or 4.5. So, it still puts the Fed kind of in a sticky situation. We're probably definitely going to see another rate hike in the May meeting of 25%, or I'm sorry, 0.25%, 25 basis points is what they'll call it. We could get another 0.25% in June. Then they have a meeting in July where they could pause, they could raise rates. They're really, going to have to react to the data. And right now the data is pretty confusing. Like if you look at some parts of inflation's dropping drastically. If you look at other parts, it's still going up. The March numbers for CPI, food was up almost 10% year over year. Energy was up a little bit. Transportation was up over 10% year over year. It's stuff like used car prices that are dragging things down. And most people don't buy a used car every day, but most of us do turn the lights on every day. Most of us do eat every day. Most of us, do have to have transportation in one way or another, or shelter. So it's like those numbers are the ones that really are affecting people's lives and affecting people's, view of the economy and view of the markets. And those ones are still going up. So, we may get a pause in July, we may get a pause in June. Right now, we're pretty much, guaranteed to get an increase in May of the Fed funds rate. If they go up in June and again in July, we'll be up above 6% for our, the target rate. Time's going to tell on that one. I really personally think that they have to get up that high, higher than just bumping it up in May again. But they're going to be data dependent. They've said they're data dependent, so they're going to keep their eye on the data as it comes out. Personally, I think the recent data seems kind of stagflationary. We've got slowing growth and inflation remains high. That's, those are the hallmarks of stagflation. But there's not many people out there on Wall Street or in the news that are calling for that yet. So, it's definitely contrarian. I've been saying that I think that that's something that we're going to see, really ever since last year. I may be wrong, I may be right. Either way, we've positioned our our portfolio to do well in, you know, a flat market caused by stagflation, but also in a market that, you know, that returns to a bull, and even in a market that continues to remain bearish with all that income that we're collecting. So, you know, that's the recap for the month. Our performance last month was, well, I'm going to go ahead and break it in half here because Jason had a stellar performance last month.
Oh, did I?
Had a bunch of winners. Yeah.
That's a relief. I wasn't sure.
Did not do well. Your first appearance on the Wealth Advisory's top 10 was a very good one. People would have been better off going with the stocks that you recommended than the ones that I did. We averaged lower than the markets. You know, like I said, markets finished the month pretty much flat. We lost a little bit. Thankfully, Jason's recommendations there kept us somewhat afloat. But I'm undaunted, and apparently we didn't scare Jason away, and he's back. And sorry I didn't introduce him earlier. I'm Jason Williams. This is Jason Simpkins. Around the office, he's J Money, and I'm J Dubs. So if you hear us refer to each other as that, you know, it just makes it easier for us to remember which Jason we're talking about, you know. But anyway, welcome back, Jason.
Hey,
welcome back, everybody else. We're going to go ahead now that I've done a little recap and get into our stocks. I'm going to give the first pick, and then Jason, and then we'll just sort of go back and forth until we get out to 10. As usual, for the folks watching us on YouTube, we're going to cut this off after our first 4 stocks because we do have subscribers that pay to get this information, and it's only fair of us to let them get it first. So instead of cutting you out of the loop entirely, we're going to give you our first 4, and then there will be a link in the description below the video. You can go ahead and click that link. You'll get offered a discounted membership to the Wealth Advisory. It's totally worth it. I think just about any of Jason's stocks last month would have paid for a subscription for the year. Some of my stocks from the previous month would have. Last month, not so much. But it's totally worth it. You know, you don't just get access to the top 10. You get access to all of the reports we've ever written, all of the analysis we've ever done, our model portfolio that's filled with over 30 stocks that, you know, we keep track of. We've got buy prices. We've got sell targets. You know, we give analysis every month. And of course, we send out these videos every month. So it's definitely worth it. I highly recommend you join us. But if you don't want to, that's okay. I won't hold it against you. Neither will Jason. And we'll keep making these as long as you want to watch them. All we ask is that you subscribe to the channel. Give us a thumbs up on the video if you like it. Smash that bell to make sure that you get notified when we send out new stuff. And, you know, if you've got any comments or suggestions or questions or anything, go ahead and drop us a comment, and we'll do our best to either respond directly to your comment or fit it into the next video. So without all that being said, let's go ahead and get started with my first pick of the month. I'm bringing one back from last month, actually the only pick of mine that did well, and it was Bank of America. Ticker symbol there is BAC. Helps if I use the pen. BAC. And so Bank of America, it was, like I said, my one legitimate winner from last month. It gave us about a 3% gain in April. Management came out and beat earnings expectations, which, like I said, were lowered, but still they beat them. And the bank showed that it had gained a lot of deposits as customers pulled funds from regional banks. You remember the previous month, we had the collapse of Signature Bank and Silicon Valley Bank, and there was also Silvergate Capital, basically the 3 favorite banks of like cryptos and startups. They all went under, and people just started getting a little bit worried about the regional banks. So regional banks had a lot of deposits pulled from them because people weren't quite sure if they were safe, and they went into those too big to fail banks like Bank of America, JP Morgan, even Wells Fargo, who's, you know, like notoriously terrible to its customers and always getting sanctioned or fined for some shady operation that they're doing, saw its deposits grow by, you know, tens of billions of dollars. So that really helped all of the major banks, all of the big banks, you know, like I said, the too big to fail banks. And Bank of America is one of those. So it's always smart to let your winners run. So I'm going to bring it back for another go, and it's my first pick for May. And with that, I will turn the mic over to, let's see, Mr. Simpkins.
All right, yeah, so this was an easy one for me. It's very simple. If you did watch last month, I talked about oil prices, energy prices that I expected to go up. This is Devon Energy, just so we have it up here, DVN, major oil and gas producer. Like I said, last month, talked a lot about, you know, oil prices coming back up, being back on the upswing. Well, they improved by about $5 per barrel over the course of the month. They're now up into the mid to high 70s. I expect that trend overall to continue. I don't know if we're going to get up to, those kind of gaudy numbers of like $100 a barrel. I don't know if that's necessarily in the cards, especially with some of the headwinds we still continue to face. You talked about the economics of it, but we still see upside pressure on prices. And, whether it's OPEC cuts or, demand in China picking back up, that demand's there. It's pushing oil prices higher, and you've seen it in Devon. This is a company that late last year and early this year got its stock price. Honestly, it got absolutely whacked. It really took a big hit, but it's been resurgent. While oil prices kind of surged over the past month, Devon is up 10%, and I think it's kind of on the road to recovery now. Like this is kind of the comeback for some of these energy stocks that were beaten down, and especially Devon. So going forward, that's why this is going to be the first pick. Like I said, this one is kind of as simple as it gets for me. You see the oil demand, you see the prices, you see a company that's always been successful, a traditional big play oil company that has a good track record, that's seen its share price beaten down over the past few months. That's a slam dunk for me. So Devon Energy there.
You like it? It's a good one. All right, and that brings it back to my second pick, which is also energy related, and it's Schlumberger, or as I used to like to call it, Schlumberger. Schlumberger Limited, ticker symbol is right here already, SLB. And this is another mover from April. Schlumberger is a great oil company. So actually they're not really involved in the production of oil. What they are is sort of like a midstream company. They're like a pick and shovel play. They help other companies get oil out of the ground and then get it to refineries, and then those refineries get it to market. Management came out and beat first quarter estimates when they reported earnings last month. Investors took the stock up more than 5%. I think that momentum can hold in May, and like Jason said, we expect oil prices to continue to move higher. There are some headwinds, but there are also some tailwinds, and it really seems like we're going to see some more running here. And like I said, it's always smart to let your winners run. So Schlumberger was a winner from April, and I think it could be a winner in May. So it's my second pick, our number 8 stock for the month, Schlumberger, ticker symbol SLB. And back to you, Mr. Jason.
All right. So next up for me, we've got a company that I've been very excited about. If you followed me ever at Secret Stock Files or Wall Street's Proven Ground back when I was running that, really covering the defense sector, I talked about this company, Leonardo DRS. So Leonardo DRS, you might recognize its parent company. Leonardo SPA is an Italian defense firm, a huge conglomerate. They make a lot of helicopters. DRS is like the American subsidiary, and they spun off in November. Okay, and it listed around Thanksgiving. I love this company because it's something really, really rare in the defense sector, which is a mid-level company. In the defense sector, typically you get a lot of consolidation. You have big players like Lockheed Martin, like Raytheon, like Northrop Grumman acquiring smaller and mid-sized business. So a lot of defense investing, it's kind of a choice between giant conglomerates or really, really kind of upstart technology companies that are just kind of getting their footing with Pentagon contracts and pushing more advanced technology that hasn't been quite proven yet and is still kind of working way up the pipeline. You don't get a lot of companies that are middle of the road, fresh out of the box, ready to go, and that's what DRS is. They are just, I had Leonardo SPA in the portfolio just for the DRS subsidiary, so when they spun it out, I really couldn't wait to get my hands on the stock. They had their first quarter of earnings. Like I said, they just became a company. Revenue $820 million for the fourth quarter, $2.7 billion for the year. That's up 6%. Net earnings were up 12% at $65 million in the fourth quarter, $405 million for the year. $405 million for the year, 163% increase in net earnings. Adjusted earnings before interest, tax, EBT, $120 million for the fourth quarter, $318 million for the full year. And then I love this. So you're always looking forward for business. Bookings, $852 million for the fourth quarter, $3.2 billion for the year. They have a record backlog of 4.3 billion, which is up 49%. So you can see the company in its early stages coming in with some really, really heavy numbers, getting a good hot start for a company that just listed. And just to give you an idea of the kind of products that this company makes, one of the recent contracts in April was a 5-year, $95 million deal for thermal weapon scopes. Those are important for the military. If you're a sniper out there, that's the kind of thing that they're using. That's the kind of high-end technology they're doing. And so that's Leonardo DRS for you. It's a very separate, it's DRS. DRS.
I love it when they put their tickers in there. It's always helpful. No, that's really exciting. That is a great one. And I like the point that you made that, it's really difficult to find a mid-size defense contractor.
It is.
They're either huge, Boeing, Northrop Grumman, Lockheed, or they're teeny tiny startups that might succeed and might just completely and totally fail.
And yeah, the big ones are great for income, and we'll probably talk about this later, but they're great for income, they're great for stability. They're going to give you a little bit of capital growth even over time if you can be a long-term investor with it. The smaller ones, I deal with a lot. Like I said, in secret stock files, they can be a lot riskier. They can be, they even have something in the military. It's called the Valley of Death, because these companies have to stay in business long enough to win defense contracts, but winning defense contracts from the government can be a long and arduous process, and some of them cannot simply sustain their business. And it has been a real problem to the point where sometimes you'll have China come in and scoop up these companies as soon as they go basically out of business. They can't get their technology off the ground because the military can't get them the money quick enough, so they get bought up by a foreign adversary. That has happened, and so that's something,
not what you want to see.
That's a problem. But they're working in the military, the Pentagon. They're working, in a way that's trying to erase that. They understand that this is a problem. They're trying to work more with the smaller companies, but a mid-range company like this that has that kind of backing and support from a major international defense contractor in Leonardo SPA and is based here in the United States, does a lot of tremendous cutting-edge work with technology and defense weapons. Outstanding.
Yeah, no, definitely. I feel like when we first invested in Leidos years and years ago, it was sort of, it was one of the few mid-range, as far as market cap at least, it was a lot smaller than the other big guys, the Northrop Grummans and the Lockheed Martins and the Boeings and stuff like that. And, we've had great success with that one. So, definitely a good one. All right, so that is our first 4. So that means that we're going to do a recap, and then we're going to cut this off for the YouTube viewers, and we're going to get into the final 6. But first, we'll do a recap. So my first pick, our number 10 stock this month, is Bank of America, NYSE, ticker symbol BAC. And so Bank of America is one of those too big to fail banks. It is benefiting with those other big banks from the depositors fleeing from these small regional banks that they're getting a little bit worried about. It grew about 3% last month, or the stock price went up about 3% last month. I think that can continue, so it's my first pick, our number 10 pick. And then next up we have Jason's first pick, Devon Energy. I'll let him do a little recap.
Yeah, as I mentioned, oil prices on the upswing again. You talk about inflation, you talk about price pressures, some of the extenuating circumstances that you often see in a market that can be extremely volatile in oil. It's based on a lot of geopolitics. It's based, you can have pipelines go offline, or any type of thing. Any kind of conflict in a major oil producing state. And especially you get into summer, you start to get into these warmer months, you do tend to see oil prices rise. And we've seen that. We've seen that here at the start of the springtime. We've seen, again, like I said, a $5 per barrel increase in oil over the past month, a 10% increase in Devon, which, like I said, was beaten down a little bit, and it looks to be like it's rebounding.
All right. And we let those winners run, so let that one run. Next up was my second pick, our number 8 stock, Schlumberger. Ticker symbol SLB, and it goes along with what Jason was just saying about energy. We're seeing oil prices rebound a little bit. Energy, oil and natural gas is still the fuel that drives the world. It just is, whether we like it or not. And for the time being, we're going to need more of it. SLB also had a great run last month. It was up about 5%, so we're letting that winner run and seeing what it can do in May. And then our final pick for the first 4 for our YouTube viewers is Leonardo DRS. And Jason just gave a really good explanation of why, but I'll let him recap a little
Yeah,
bit more.
freshly spun off in November. Just had a great inaugural quarter. Really showed kind of what they're made out of and why Leonardo was so confident that this business could stand on its own. And makes a lot of good cutting edge weapons and basically accessories, if you want to call them that, for weapons platforms in the military. Great mid-sized defense contractor, which you aren't going to find many of.
All right, and there you have it, guys. Those are our first 4. Number 10, Bank of America. Number 9, Devon Energy. Number 8, Schlumberger. And number 7, Leonardo DRS. And with that, we're going to cut this off for those of us watching on YouTube. Like I said, if you're interested in becoming a full-fledged member of the Wealth Advisory, there's a link in the description below the video. There should be a link that pops up on the video too, and it'll offer you a discounted membership. This is basically the cheapest we can give it out. I shouldn't say the cheapest. This is the lowest price that we can give because it's definitely not cheap. Cheap has a negative connotation. Inexpensive, I think, would be a good way to put it. You really get a lot more than what you pay for, in my biased opinion, and I think in the opinions of a lot of our subscribers too. So as always, thank you for watching. Have a great month and come back and check in with us come June so that you can see how we did.